All right, Ken Range Theory Trader back with you with another video, just with a week in review for this week of, let's see, April. I'm not even sure the date. Today's the 18th, April 14th through the 18th. I think that's right. So just Monday through Thursday. The only reason I'm not doing today, which is Good Friday, it's a banking holiday, so I really wasn't expecting much price action. So I'm just going to stick with the price action that we had and some of the setups that we had from Monday through Thursday. So these are not all of them. These are just a few. And again, for our daily bias, you'll want to look at the video in the description about how to find the daily bias using the candle range theory. But in a nutshell, all you do is look at the prior day's candle color. If it's red, you want to go long. If it's green, you want to go short. That's it. All right, so let's get into it. So Monday, we had this red candle right here, which establishes the range. So what we want to do is go long below the low of Monday. That's it. And something I really don't stress enough is the importance of time. Ideally, you want to see this happen between 2 a.m. and 5 a.m., which is really the London session. That can be extended through about 9:30 a.m. to 11 a.m. But after 11, I'm really not interested. That is not to say sometimes trades can't work out. It's just that the odds are lower. So here we go. So this is Monday's range right here. So I'm going to just do the replay options. We can see how Tuesday worked out. So let's see if I can go do this. Yeah, that'll work. I'll go to the 15-minute chart here, and I actually already got it isolated. So what we had here, we'll get rid of this line. So this is Tuesday, the trading day that I just showed, right? So we had, this was like one of those ones where, keep in mind, if you get stopped out during London, if you think this is the low of the day below the prior day's low, if you'd have took along here, that would have been good for, I mean, 98 pips, which isn't bad. So this actually gave you two opportunities. So I spoke a little too soon. So this was the initial low of the day here with a close above it right about here at 1:30, a little earlier than 2, but it did give a chance for you to catch it here again between the hours of 3. And I'd say between 3, best entry would have been 3:30, 3 to 3:30. I think I took this trade, if I'm not mistaken, because I got out real quick too. I seem to remember that. But so right here, this could have been a good trading opportunity here with the stop loss below low. The risk to reward would have been, again, 1 to 2. That's all I shoot for. So whatever your stop loss is, you just multiply that by 2. So if your stop loss in this case is 40, you're going to go for 80. That would have worked out. And it also gave you a second opportunity to get in during the US or New York session, with the best entry being right here. Let's make this a little bigger. Best entry being right about here on this candle's open right at 10 o'clock. Same risk to reward, 40 pip stop loss, 80 pip take profit. It was a straight rise, real simple. Maybe add a couple positions, that would have been good to maximize your profit potential. But again, it's all based on going low below the prior day's low. That's it. So that was that one. Let's go to the next one. Again, I just keep it simple. I just look for certain behaviors at times of the day. So I'm not watching the chart 24/7. So the next one that we're talking about is pound odd, which was a short. So let's take a look at our daily range. We traded off of Tuesday's range, okay? And so our bias is short because this candle is green, all right? So we want to go short above this candle's high. So I'll go to the replay. We'll drop down to the 15-minute, or better yet, the 5-minute. Either one is fine. You can trade either one. Okay. All right, and here we go. Now this is just your basic M pattern above the high of the day. So remember, my first litmus test when I come to the chart at around 9, or not 9, but 2 or 3. Actually, start at 3. I don't start at 2. So I only trade for a couple hours during London. Is price above the prior day high? Prior day high being right here. It is awesome. So next, I look for the money candle, which creates the high of the day, and then a break below it. That happened right here. Okay, the money candle, the initial high of the day was right here at about 2:25 a.m. And see how price broke below. Let's make this a little bigger. Price broke below this candle right here, this green candle right here, to say, hey, I'm going short. There was a retrace, so you could have got in here at 235 with the stop loss above the high. That would be a 30 pip stop loss. It did retrace some, but then it just dropped right back down again. So no big deal. Easy. So it gave you two opportunities, one at 225, but then you could have got in here at around 325, all the way up to like, 4 o'clock, 420, 445. But this was pretty much the last shot right here. That candle opened at 425. That was it, because that straight drop, that's just too fast. This was a 5-minute chart. So price dropped. How many pips is this? You're talking about a 94 pip drop in 5 minutes. Okay, you would have been out of this trade in 5 minutes had you got in right here on this candle's close. Okay, so sometimes these moves can come fast, especially the pound pairs. They do move quick, but again, just your short bias came from the prior day, and then once price is consolidating above that prior day high, and creates that M pattern, first leg, second leg during this key time between 2 and 5. This is it. That's all you're looking for. Okay, if price opens up and it's below the prior day's high, you're not interested in that. All right, so that was pretty easy. That was good for 100 pips. That you probably could have got more than 2 to 1 on that one. But at the same time, if you added positions, but again, once you get a big spike like this, I'm fine. I don't need to capture every single pip, because as you can see, it kept dropping. I don't need to make what is this, about 200 pips in one day. I don't need all that. It's just not necessary. Can you get it? Yes, but do I go for that? No, because on average, price doesn't move 200 pips a day in any pair on average. So let's get out of here. So I don't need price to move 200 pips in a single day, every single day, to make money, because that's not the norm. And as you can see, price just came right back. Anyway, this was the trading day I just showed you. Right here. See how this would have been our entry somewhere up here. Price spiked all the way down. See, and then it came all the way back up, and it's still retracing. So take the meat of the move and just be happy with that. All right, you don't need 1,000 pips to make money. You really don't. Okay, so the next one was a Euro CAD. So we're trading off of Tuesday's range. We have a green doji right here. This is the high. So we want to go short above that day's high. So I'll drop down to let me do the replay. All right, now this one was a little unique because it could have been an overnight hold if you wanted to approach it that way, up to you. But let's now go to the 5-minute. Okay, then what do we look for? Is price above the prior day high? Here's the prior day high right here, so yes it is. Then we look for that money candle that creates the high of the day. Same thing over and over, guys, like I just showed you. This is just another short. So here's the money candle right here that creates the high of the day. Price closes below it. Does a little bit of a retrace and then just tanks. So your best entry window would have been between 335 and about 4 o'clock. All right. Anywhere in here would have been fine. Stop loss could have been about 25 pips. So we're going to do 25 pips, 50 pip take profit. Like so. And as you can see, it hit no problem. You would have been out of that you would have been out of that trade in a matter of minutes. Now, again, as far as the overnight hold aspect comes into play, sometimes you use your best judgment, because if you want to be a swing trader a little bit and try this, if you think this high on a Wednesdays are the best trading days as far as using this method, could be the high of the week. As you can see, price kept right on tanking through the next day. This right here is Thursday, and look at this. Went up a little bit, then it just dropped like a rock. Kept going. It's off the screen now. Okay, so that's a possibility before it came back. But again, this first trade here that I showed on Wednesday was ideal for me. I'm not worried about Thursday too much. Okay, could you have captured all this price action? Yes. Just for me, I don't need it. Okay, so that was that one. Dollar CAD now. This was a long, I think this was a Monday trade. Yeah, this is a Monday trade. Some people don't trade Mondays. I do. If Friday sets up the good price action, then I'm with it. I don't have a problem with it at all. So we trade off of Monday's range. So again, because the prior day candle, because Friday's candle was red, I'm long below the prior day low. Same thing in reverse. So let's take a look to see how it played out. So when we come to the chart around, 2, 3 a.m., we look to see, okay, where's my money candle? Where's the candle that is creating the low of the day? It's right here. This one. There's only going to be one candle that's the money candle. Then I just wait for it to close above it. That close came right here. Right in there. So that was right on the tail end towards 5 o'clock. Now, will there be times where it goes a little bit beyond 5? Yes. Sometimes setups do happen outside this 5 a.m. They happen after 5, and that's fine. Okay, it's really not a big deal. Okay, so for this one, this would have been good for a good, 1 to 2. 25 pip stop loss, 50 pip take profit. It hit it with no problem. Okay, so you would have been out of this trade before USA session even started. Typically, when I take a trade in London, I like to be out before USA starts. USA sessions, when I traded them this week, didn't really give me too much, but London is the best time to trade this method, bar none, between 2 and 5 a.m. Eastern Standard. That's where you'll see the most setups. At least that's how it is now. Could that change? Maybe, but for now, that's just how it is. So that was a dollar CAD. So we'll exit out of this. Go back to our daily. And the last one I wanted to cover was Euro Swiss. This one was a long also. So first off, we see, okay, what's our range? So we're trading off of Monday's range, which is a red candle. That means I want to go long below the prior day's low. Okay. So when price goes below the prior day's low, that's when I'm looking to go long. So let's drop down now to our 15-minute chart and see how it looks. So remember, we have Monday's range. So Tuesday is our trading day. And this is one of the ones where it happened a little bit outside of 5. All right, where price barely poked below the low of the day. All right here. This was at about 7:45 a.m. and then shot up. So this would have been better as a USA session trade, but at the same time, because USA session did give you a slight setup right here. You see how it pinned the money candle line here, the top of the money candle. So that is an option as well to get in, like around here or so. So the better trade actually would have been USA session, but you still could have got a decent risk to reward. With a 25 pip stop loss, 50 pip take profit, it would have hit no problem. So that was pretty much it. And so, like I said, just know what you're looking for before you get into it, and you'll know where to get in, where to get out. All right. So for more great training and tips, definitely take a look at the other videos on this channel. Remember your daily bias, and then let that be your guide for the following day. You don't have to hold anything overnight, and you really don't have to hold anything through another session as well if you don't want to. And I hope that's helpful. I appreciate you watching. I appreciate your time and attention. Have a great rest of your day.